I am thrilled to be joined by my esteemed panelists here. We've got James Seyfert, who is an ETF analyst from Bloomberg Intelligence, Sandy from Franklin Templeton, will give us perspective on the wealth management side, and also Pranav, who is a portfolio manager at Van Eck. So real great cross-section of the category. Let's start off with where we've been. So we've had these ETFs launch, the Bitcoin ETF. There was a great price movement in Bitcoin, and it's faded somewhat since then, making a comeback now. And we had the Ethereum ETF. How does that square up with expectations? Why don't we start on the size, volume, and flow side, James, and get your perspective?
Yeah, I mean, we had high expectations for the Bitcoin ETFs, and they exceeded them as far as I'm concerned. Even the smallest fund out there that has launched is still a pretty successful fund by any new fund launch standard, right? The volume and flows were off the charts for a while. They've since subsided mostly. They're kind of settled into this rhythm. But we're at an all-time high in net inflows, so around 18 billion since the launch. Cumulative flows, that includes the outflows from GBTC, and then a lot of that money came back into other products. So from a flows, volume, trading perspective, any way you look at these things, it's been a smashing success. Over time, any successful ETF category is going to see, what you want to see is over time, you want to see that cumulative flow number go up and to the right. That means money's coming in, but over time, there's going to be dips. Like money's going to come out. When things have a bad couple weeks or trading, you're going to see a lot of outflows, and we've seen that, and then we keep seeing the ETFs come back. Now, the Ethereum ETFs, on the other hand, have had a real rough go of it, but there's many reasons I could to guess why that happened, but we can get into that.
So, Pranav, if the ETFs exceeded expectations from a volume perspective, why hasn't price followed through as much as we might have expected?
Yeah, so let's focus on the Bitcoin ETF, right? Bitcoin's kind of this hyper-reflexive asset. So you have a catalyst that gets people excited. Retail starts to buy Bitcoin or buy the ETF. A lot of people start levering in the perps market. You have a futures spread between the price of the futures contract as well as the spot market, and you have this great basis trade that people can put on where they can buy spot, the ETF, and then short CME futures. And that yield was like almost 20% when...
So they were playing the spread, focused on capturing yield rather than the upside in Bitcoin.
Correct. Yeah, you had a lot of delta neutral positions that, like, let's just say multi-strats were probably putting on, while you had the retail holders who are like kind of levered longing Bitcoin. And that was a lot of, like, I think the activity in the first 6 months of this year. Like, the RIAs and the wealth managers and FAs really haven't started to come in. In my opinion, they're kind of just starting. So the what I would say is like the organic long-term spot demand is just starting. What you've had so far is kind of this speculative demand, narrative-driven moves.
Got it. And Sandy, from a wealth management perspective, what does this mean? Pranav mentioned that we're just seeing the beginning of institutional demand. UBS starting to incorporate Bitcoin ETFs. What are you seeing from a Franklin Templeton perspective?
Yeah, so I think that, what's been interesting is this is such a new and novel product for anybody on the wealth management side. I mean, here in this audience, Bitcoin is a familiar product. A lot of the other coins are already, people are deep into the understanding of the tokenomics and the fundamentals. But when you get outside this industry, which is pretty insular, right, and you get out into the broader wealth world, people still have perceptions of Bitcoin dating back to like the Silk Road days. So You've got to overcome this whole kind of updated story and tell the new story to the advisors. And if it's a matter of selling the individual ETF, that's a tough sale for them. But the real benefit in the wealth space is going to come whether the client's realizing it or not, because almost all of the wealth industry today works on the basis of model portfolios. And if you are allocated to the model portfolio, you will automatically have that portion of the dollar that you're putting into the new model allocated to the Bitcoin ETF or to the Ethereum ETF or to others. And so what's going to happen is the flows from wealth are going to start to kick in as these model portfolios are rolled out on the platforms, and you're starting to see the first wave of those beginning. The other thing is that they need a little bit more of a track record in some of these firms before they're able, from a due diligence perspective.
They need more track record in the ETF format, even though we have a spot track record.
Well, it's a very new structure in terms of an ETF. You've got new counterparties that they've never had to deal with before inside of the ETF processing. So they're waiting. Most people want to have at least a 6-month to 12-month track record before they're going to put it on the platform for the new product.
So that puts us 6 to 12 months, puts us to kind of where we are now for Bitcoin, and then year end. James, do you want to get in there?
Yeah, I was going to say, the one narrative I always hear is like, why isn't the price mooning if we've seen 18 billion come in? I think a huge part of it is what he said, right? Like, a lot of money's coming in. There's some of the biggest holders of these ETFs are hedge funds that are doing that basis trade. They're shorting the futures. But another part of it is like when the news broke that BlackRock filed and everyone started buying in anticipation that we might get an ETF, you got to remember Bitcoin was like 20K. Like, and Bitcoin outperformed every other crypto. So, like, this run-up, it launched in the mid-40s, but, like, that run-up from 20 to the mid-40s when it launched, that was largely because...
big run-up.
Yeah, and people who bought in anticipation of the ETF ended up selling it, so they were part of the selling factor that the ETFs bought. So I think there's a lot of different reasons why we haven't seen 100K price, but...
Yeah, you also had maybe 2 or 3 idiosyncratic sellers, right? You had the German government. You had the Silk Road Bitcoin move around. We don't know if that got sold. And then you had Mt. Gox, and you don't know how much of that supply is also clearing in the market. So you've had combination of these factors that's potentially holding it back.
Right. Who's the primary buyer going forward? You talked about hedge fund adoption initially, people that anticipated the ETF rollout, Q4 of last year. Is it retail, or is it going to skew more institutional? Do we have any insight around that?
I mean, I'm going to go off of what Sandy was saying. The only known, like, the ETF world or the asset management world, a lot of it is model portfolios, like she was talking about, but a lot of it is these platforms, these wealth management platforms, these wirehouses, and there's a lot of restrictions.
Morgan Stanley, those are the classic wirehouses.
Exactly. There's trillions of dollars in those things, and the only one that we know of that's publicly said you can buy these ETFs is Morgan Stanley, and still you need a couple $1 million in assets, and you need to be at like the highest end of the risk curve just to qualify for your advisor to potentially put you in those things. So we're getting to a point now where, one, a lot of times you need 3 years of history. Some require even more history than that. There's all these things that need to happen. So I think, like, over the long term, it's the wealth management industry that will be the biggest users. Right now, one of the biggest users is hedge funds. They're not necessarily directionally long Bitcoin. They're just doing it to capture that spread. It's a trade for them.
Right.
And then retail right now is the biggest user. But that could change.
And so, Sandy, you brought up the point earlier that it seems to me that it's end client driven. So they've got to raise their hand and ask for the product. Is that the case from Franklin Templeton?
That's definitely how it sits today. It's end client driven. And I think that, the retail audience will get more excited based on price action or less excited based on price action. The institutional audience is always looking for the angle on how they can use the ETF to extract basis points, of alpha. And then, I do think that the big eventual flows in the ETF, not necessarily in the underlying, but in the ETF, I think the big eventual flows are going to become from the managed account client, primarily because there's this whole push within the world of wealth management to get more alternative exposures into the portfolio. And most of the alternative exposures that people are looking at right now are kind of confusing to the underlying advisors, right? I mean, you're looking at a private equity or a private credit exposure in a new type of wrapper like an interval fund, and they don't really understand it. Whereas something as liquid as an ETF is going to be something much more approachable to them. And so we eventually see these ETFs taking over the alternative sleeve of the allocation for a lot of the retail model portfolios.
If you just step away from the U.S. for a second, I was just in Singapore for Token, and this is my 3rd time in Asia, and I've done these kind of BD type trips 3 times, once last year, once in January, once now. Meet a lot of the same people, right? Most of the money in Singapore is family offices or single family offices, multifamily offices, and private banks. I think the private banks are probably the last to move, right? They have to kind of whitelist these assets. But the noticeable change I found with the family offices, the single family offices, were this kind of mentality, which is I'm going to have some of my bond, 5% yielding stuff here. I'm going to maybe own some Mag 7 stuff here, and I'm going to own Bitcoin, the ETF, as my de facto crypto exposure. It's like the one asset you're going to gravitate to. So even people that had no interest in crypto 6 months ago, 12 months ago, are starting to step into Bitcoin along with like that asset allocation framework.
Got it. So bottom line is we need the wealth management industry to play the role of the next big leg up. And Sandy, have you actually seen proposed percentages in the model portfolios? What does that look like in terms of sample allocations?
Yeah, I think there was a report out. One of the big asset managers said the ideal exposure would be 80%.
80%.
That's not really what they're doing. Most people are starting with a small 1 to 2% allocation.
Okay.
Maybe as much as 5%, but I haven't really seen much above 5% at this point.
Gotcha. Let's shift gears a bit. Like in terms of how do we get an unlock? And like clearly, there's a lot of focus on the election cycle, and do you get a new SEC chair? Any thoughts on whether we'll see a Solana ETF in 2025? And does that require a change in administration or not?
Want me to go first?
Whoever wants to jump on that? That was a question not in the prep session, actually, so I just kind of threw that out there.
I really do. I mean, as that has the. Let me speak again. The presidential election will have an impact on that, right? Like the odds of us getting that in 2025 with a Democratic admin are slim to none, as far as I'm concerned. They're saying they're going to be more positive and more pro than this current admin has been.
But there's no specifics.
There's no specifics. There's very little specifics. They have been vehemently anti-crypto. They are going to stop this. They basically did stop Van Eck's filing at this point. Van Eck and 21 shares have filed for it, and it's kind of like in limbo right now. They've withdrawn their 19B4s, which is one of the 2 filings you need to do. My theory, even if we do get a Trump admin and we get a new head of the SEC, it's not guaranteed that we get a sole ETF in 2025. I think if that happens, and I think 2026 is definitely going to happen, it's possible.
For procedural reasons, you mean?
Yeah, just procedural reasons.
Okay.
There's a lot of issues. Right now, you kind of need a market for surveillance, and so you can look at what's going on. And they don't really have that. There is no regulated futures market for Solana.
Yeah.
Now, the problem is there's no like set rule that says this is exactly what you need. It's just This is what the SEC has done over the last 8 years and said was required.
Right.
But there's no real rule that says all this is required. So theoretically, they could kind of ignore that and like go off of set a new path.
James, I want to make sure this is so. You're saying the SEC has not provided clear rules of the road to register. So are you serious? This is
well, they have for Bitcoin and Ethereum. It's just the roadmap for Bitcoin and Ethereum would say that we're going to need at least 3 more years for a Solana ETF because you need a regulated futures market, regulated market.
Right.
Now, you could get something like an act of Congress that smooths this along, a new SEC admin. You could do all these things that would make this go quicker, but we're likely looking at years. But it's possible it could happen in 2025, I think, if we do see Trump win. But even then, it's unlikely. It's not necessarily likely.
Yeah.
I think you're going to see Solana. I think you're going to see pretty much every major large cap coin in an ETF. You're going to see multi-coin indices. It's just a matter of, is it going to be next year? Is it going to be the year after? I've been, by allowing the Bitcoin ETF and then the Ethereum ETF, it's like the barn doors are open. Right, so they can come up with like interim slowdown measures, but the direction of travel is pretty clear.
Is that true, Pranav? You think you'll see an ETF for every coin under the sun?
Well, I mean, so we generally have a view that, I have this view that tokens today are a $2.6 trillion market, including Bitcoin. That's going to be a much larger number in the future, but it'll be very top heavy. So like your most valuable projects will be like the top 10 that accumulate a lot of that value.
Right.
So it probably makes sense to have ETF-like products for a lot of those things that, that people want to get exposure to, but then you really need ETFs for like the long tail of products.
It's like a Maker ETF and a Uniswap ETF.
I don't know about all those, but yeah. I'm not going to comment on individual tokens, but yeah.
Right.
But I want to add one other thing, right? I think that, this ETFization of the crypto industry is super important, right? Don't underestimate how important a stepping stone this is because, as Prashant just said, we're only a $2.6 trillion industry right now. The global asset management industry is $120 trillion, right? So to get into that larger pool of money, we need to be able to have a vehicle that can actually be processed in the systems that have been built to process those pools of money. And so the ETF is moving crypto into the current rails as the new rails for the industry and the new regulations are being defined. And then the ETF is portable enough as both a structure and in the way that it operates with the in-kind redemptions, that once you start to allow in-kind, you're going to be able to really easily unbundle these ETFs and put them into tokenized wrappers. So to us, it's very clearly a stepping stone to further tokenization of real-world assets, as they say. But this is a really important stepping stone for the next 5 years because it's really the bridge to those bigger asset pools.
100%. If a wealth manager cannot show the asset in a client's integrated brokerage statement, they're not going to offer that investment. And so ETFs are the bridge between TradFi and digital assets. So it plays an important role. So it looks like one of the moves then is, hey, can you front run the next ETF? Maybe it's Solana. The timing on that's hard. Didn't quite work for Ethereum. What are the big unlocks then looking ahead to really get public awareness and user demand interest for the next year or two?
Yeah, I mean, I think it's going to be stablecoin legislation or something around stablecoins in general, right? So it's our belief that Bitcoin's the only product in crypto that's achieved kind of mass product market fit. Hundreds of millions of people own this thing now, and all you're betting on is now like more people buying it and the existing base increasing its exposure to it. So it's a pretty clean story. But the next thing that probably is the domino in all this is stablecoin adoption. So stablecoins are 170 billion. They're like stablecoin issuers are like the 16th or 17th largest holder of T-bills. I believe stablecoin issuers own more T-bills than the country of Norway. So it's kind of interesting, and it has product market fit from both the consumer and the merchant side. So consumers in the world want U.S. dollar stables because it's a way to save. They don't want to have their local currency. And merchants want it because it's better, faster, cheaper.
They don't want to pay 3% to Visa, and Visa's got an antitrust action. But you think stablecoins will unlock more crypto though? Why wouldn't stablecoins just emerge as a competing form of settlement that's dollar back? Like, why would that necessarily drive more digital asset adoption?
Well, so if you look at most of stablecoin settlements, trading activity, it's across a variety of blockchains. Still dominated on Ethereum today, but Solana's probably up there among top 5. A lot of it is on Coinbase Exchange Base, which settles on Ethereum. So these blockchains will be like the beneficiaries of increased stablecoin volumes and settlements, along with like certain decentralized exchanges and borrow-lend protocols and all these things.
And that's going to take an act of Congress.
What's that?
If I could expand on that, right? I completely agree. It's stablecoins. But then the path from stablecoins, think about how we see this operating in the economy today, right? Stablecoins don't pay interest. People take their cash and sweep it into money market funds, right? So I think that the rise of stablecoins gives increased emphasis to the ability to use tokenized money market funds, tokenized treasuries, which in turn allows for wallets to be opened by all of these entities that are looking to do collateral management. Collateral management, I think, then becomes the use case into the crypto ecosystem, because if you're recording these collateral trades on public blockchains, you need the cryptocurrency to be able to pay for the block space. And then all of a sudden, people are starting to hold these cryptos in their wallets and realize, hey, this is a pretty interesting investment opportunity. And so I think the pathway is through the banking system with stablecoins into the collateral management systems, where there's so much inefficiency today and people waste so much money that's being posted there, into the crypto ecosystem.
Yep. Let's deep dive a little bit into some of these unusual peculiarities in the ETF market. There's a closed-end fund called GSOL, issued by Grayscale. It's got a 700% premium to NAV?
600 plus. Yeah, I don't know exactly.
600 plus premium to NAV. Now, we saw that we had a Widowmaker trade where you had this premium to NAV dynamic with other Grayscale products, including GBTC, and hedge funds and platforms like BlockFi would sell forward crypto to try to capture that spread and bet on that premium still being there in 6 months' time.
You should walk through how people do the trade.
Go ahead. Walk us through the trade and what's going to happen from here.
Let's take like the GBTC trade that got built up over time, right?
Yeah.
You buy Bitcoin spot, use that as collateral to mint GBTC, but that GBTC unlocks in 6 or 12 months. And then you can use that GBTC as collateral to borrow more stables from, at that point, I think it was Genesis.
Right.
And then you'd loop that trade again, and you do it over and over again to capture like have a levered carry trade.
Right.
And then the spread goes negative, and then your carry trade comes.
The levered carry trade,
Right.
betting on the premium maintaining.
Right. And so in the GSOL situation, you want to ask, is there anyone offering leverage on that trade?
Right.
I don't know.
I doubt it.
Well, people are doing that trade. I do. You had the FTX unwind. People bought Solana through Galaxy.
Yep.
That's a drip. They can access a certain quantity over a certain period of time. And it's also locked up as well. But that seems to be, is that an alpha opportunity? Meaning, hey, you're buying SOL from the FTX estate at a discount, and then you sell it forward, or are you, at a premium, or is there a risk of the premium collapsing?
Well, I actually don't know if you can even practically do that trade, right? Because the Solana, you
can't deliver
the
it.
FTX estate is like locked up, and there's like they have an unlocked thing. You can't use that as collateral or as an asset to mint
Right.
GSOL.
Right.
But I think people could, theoretically take their SOL and then go mint GSOL and think they're going to capture some massive premium when it unlocks.
If you could borrow against your FTX estate Solana, then
Right.
swap out for liquid Solana.
Right.
Sell for that. Go ahead.
Yeah, I mean, the simple way is like what people. I know family offices were doing this with GPTC and ETH. These trust products. One, a lot of these, you got to realize, a lot of these institutions, they can't buy this stuff directly. So by wrapping it in this over-the-counter 144, like these specific regulatory requirements, all of a sudden they can buy it. So that's why they were doing this. They're private placements. You need to be an accredited investor, qualified purchaser.
Right.
And the theory is, even if you don't lever it, it could be a good trade. Like right now, we said it's at least a 500% premium. I think it's over 600 right now. So all of a sudden, you gather all the Solana, you hand it over, you do a creation in that trust. Those shares unlock in 12 months or whatever. And if that premium's still there, whatever happens.
That's an interesting idea. Right.
Yeah, you could still. It's not a levered trade.
To be clear, this
That's why liquid
premium in
Solana
GSOL has existed for like almost, 6
Yeah.
12 months, right? Like very long time. So if you're looking at this trade now, you might be sort of the bag holder on their side where
Correct. There's risk.
spread will correct.
And there's no Solana futures market.
And look at the
To manage
fees,
your risk.
and look at how people haven't been able to get out of the GBTC trust. So
Right. And why do these trusts still exist now that we have ETFs?
Well, someone's generating some decent management fees on that, right?
look, it
We
was
know why Grayscale has the trust. Yes, they want the management. The issuers will never let go of the trust. But tax one consideration. People don't want to incur a taxable gain. But is there any other reason for these closed-end trusts to exist?
There was, right?
Was.
When we did not have institutional infrastructure, institutional quality custody, an ability to do KYC, AML on any kind of clients coming in. This was not a space that institutions could participate in. So
Yeah.
the trust gave them an entry path, but it's an entry path that's not really needed anymore, right?
Yeah, right.
The more we move towards an institutional infrastructure, the less these trust structures are going to have any kind of appeal.
Right. We got 2 minutes left. Let's do best ideas. Just walking Pranav down this way. How would you express a view in digital assets today? It could be ETF. It could be, on the networks themselves.
Yeah, so I've run a liquid token strategy, so we have a pretty simple way of framing it, which is the best returns in the token market is generated by picking a token that's not top 10 that will be a top 10 in 2 years, right? So taking like an asset that's number 50 that can migrate to top 10, that's where a ton of alpha is generated. So I live in the altcoin world, so I don't think you're gonna have like this crazy altcoin.
Small cap growth strategy.
It's called that, yeah. And everyone kind of is used to like these long tail altcoins having a crazy bull run every single time. We don't think that's going to happen this time around. It's going to be very different. You could have individual assets that go up. And the way we've been selecting those assets are essentially around that stablecoin theme, which is stablecoin market cap goes from 170 billion to, say, a couple of trillion. Who are the secondary winners coming out of that?
I agree. I think it's going to be liquid token strategies with token picking to replace stock picking. But that's for the audience that has the knowledge, right? I mean, the big unlock and the huge opportunity from an AUM perspective. So that's the alpha opportunity. The AUM opportunity is going to be the ETFs.
Any picks, James? Can you go there?
I'm not even allowed to go there, but I will say I think liquid token strategies make a lot of sense to me for the reasons they just spoke about, but also like there's a handful. It depends, right? Are we going to get broad sweeping legislation that makes it very easy and we get simple steps for what's required to launch an ETF? If not, if you pick one or two assets that are going to be put in ETF wrapper next, that can be the catalyst. But then again, Ethereum, it hasn't done so hot since it got an ETF.
I'll give you a trade idea. If there's a change in the SEC leadership and the fee switch where Uniswap can be activated and other similar tokens, they can pay a dividend, then those should re-rate quickly. So I'd focus on, will you get an SEC change? All right, thanks everyone.